So let's give a little weekly update midweek. Markets started the week on a more volatile note. With the war in Iran, there's a lot of uncertainty. Just last week, conditions were calm and rates were trending lower. But that narrative has quickly shifted. Heightened geopolitical tensions have pushed oil prices higher and introduced fresh uncertainty across global markets. As a result, interest rates have been a bit choppy, drifted upward in recent sessions. The benchmark 10-year Treasury yield is now above 4% after touching 3.94% last week. Typically, during geopolitical stress, investors move to safer assets like U.S. Treasuries, which would help rates and help them become lower. But this time, it's a bit more complex. Rising oil prices are fueling inflation concerns, which can keep upward pressure on rates even as investors seek safety. Gold has moved higher, risk assets have faced pressure, and yields remain volatile as markets sort through these competing forces. Markets will be watching upcoming economic data closely for signals on inflation and growth, including key reports on employment, consumer activity, and inflation trends. Meanwhile, developments in the Middle East remain an important swing factor. Any further escalation could keep oil prices elevated and influence rate movement. So as markets weigh economic data against global headlines, interest rates are likely to remain sensitive, as always, making strategy and timing especially important in the days ahead. For now, it seems to be a knee-jerk reaction with higher gas prices and rates ticking up. Today, they're starting to level off a little bit more. But people waiting to refinance, thinking lower rates in the future, who knows? One thing we learned from COVID is the economy and the markets are volatile, and the pressures they face are often not predictable. So many thought rates would continue the downward trend, which for now, due to the war, does not appear to be the case. If you're expected with a refinance after numbers are run to save $200, $300 a month, that's a lot of money. $250 a month is $3,000 a year in savings. It's a nice savings. So I would definitely consider it. Hit me up, stay informed. Have a great week.